Good afternoon, everybody, and welcome to our EGM Securities update. We've got Gaurav with us, who's in Dubai. Gaurav, plenty going on. The euro, a little bit of a recovery I saw, lots of comment coming out. Is this the silver bullet for a euro recovery, or how are you reading what we heard in the last 24 hours?
Well, Ali Khan, I think it's a little too premature to say. Of course, we've had, since last Friday, this is when the story of the overall Italian debt to GDP ratio had been released. Then we saw continued weakness through Monday and Tuesday's trading session, when several top Italian lawmakers had even gone as far as suggesting that Italy could readopt its own currency. So this has, of course, put a lot of strain on the current relations between the EU and Italy. While we did see a slight recovery in trading today, on Wednesday, I would say that this could be a bit short-lived. We would need to wait to see how the story continues to pan out. I think that the bit of buying support that's come into the euro today was as a result of all that short covering that happened as a result of Monday and Tuesday's sell-off. But again, I think it's a bit too premature. The rhetoric coming out of Italy right now is one that's very supportive towards the EU. Of course, they don't want to be seen as someone fighting with their big brother, for example. So I think while they may be looking at the key words to kind of appease current EU lawmakers, I think this could be the trend. And overall, I'm not expecting to see major upsides in the euro as a result of this. The targets that were given on Monday of 115.50 were very, very easily filled. We saw the full euro sell-off against the US dollar bottoming out at 1.1505 levels. Again, as I mentioned before, we've seen the euro now stabilize above 1.1550 levels. But to be quite frank, Ali Khan, I wouldn't be surprised if we see the euro moving back below 114.50 levels, especially with the non-farm payrolls report coming up on Friday.
You were going to touch on the non-farm payrolls. The US economy continues to blow hot. Trump continues to talk about the strength of the US economy. Unemployment is at record lows, job openings at record highs. What do we expect? Is this a big market moving number potentially, or do you think it's all priced in?
The US non-farm payrolls report is seen as the godfather of the economic calendar. It is by far the most market-moving, high-risk event on the economic calendar on a monthly basis. Of course, it releases on the first Friday of every month. And as you've well pointed out, Ali Khan, the recent flow of US data has been very, very solid. And we're expecting to see another pretty solid payrolls report on Friday. Now, expect to see any major gains on the average monthly job gains above 200,000, and this would lend immediate buying support into the US dollar. Also, a key figure that we need to watch out for on that Friday report is the average weekly hourly earnings. This basically shows how much wage growth there's been in the US during the last month. Of course, this is a very, very key insight towards how US price pressures are growing. So again, if we see a reading on Friday above 0.3% on that average weekly hourly earnings, then expect to see even more buying support coming into the US dollar. So if we see a reading below 0.3 or less than 0.3, then this could be very, very weak for the dollar.
That's a bold call, and certainly the momentum has been going that way. Gaurav, thanks very much for finding time in your busy day in Dubai to speak with us. We appreciate it.